welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time using Q systems. You could. How to achieve the most perfect buy sell timing. That starts at the market level. If you are correct on the market, at least 50% of your work is complete. You can be accurate on the market direction only, in my experience at least, by studying breadth analytics. Without that, in my experience, you cannot be accurate enough on market direction. The mere study of market externals like ETFs, futures, or indexes is insufficient. This week, breadth analysis from Q again led to accurate and timely buy-sell decisions. I will demonstrate that in today's session. The next most important driver of accurate market timing is support and resistance studies, provided they are reliable, consistently reliable. Q memory lines are consistently reliable support and resistance trend lines, as you might have noticed by now. I use that all the time. I used it last week. I will use it this week too. In last week's recap, I mentioned it was not a time to short, though the market was weak. You may re-watch the video. It is on my YouTube channel, Trading Profitably. That analysis worked perfectly as the market recovered. Along the way, you could buy stocks. Q flashed several buy signals and situations came for buying. What about now? Now, market went up, but Q Analytics is saying do not buy now, though market went up. Accurate trading direction goes a long way in swing trading profitably. I will show how you can use Q to make profitable buy-sell choice at the right time. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using only Q systems and techniques. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q Systems run on Metastock and TradeStation platforms. It has multiple components. I will use several of them in today's session. This is leaders index, one of the breadth studies that I use regularly. It is part of Q market breadth. Whenever I look at an instrument, be it a stock, ETF, index, futures, or a custom index like leaders index in this case, I ask two questions. One is what is the direction and what is the preferred trading direction. In the weekly, the direction is sideways, it is inside the triangle. In the daily, the direction is sideways, it is inside a triangle. And what is the preferred trading direction? When it is inside a triangle at the lower edge, preferred trading direction is buy. At the upper edge, preferred trading direction is short. It is at the upper edge now. But let's step back and let's refer to last week's market recap. The more we refer to last week's analysis and see how that played out, we do that week after week, we get confidence on the analysis, and then we can trade based on that. In last week's recap, I mentioned the leaders index was closest to support memory here. Among all the market instruments that I showed in last week's recap, and I mentioned if that support held, price went up from there, leaders lead, it may lead other stocks to move up as well. That anticipation worked out beautifully. First, it displayed the bullish indecision cluster. Then, on this day, Wednesday, the flow momentum color turned bullish, price went up. As the leaders went up from memory trendline support, the market also went up. Because now it is near the memory resistance, I would rather not buy, but the decision to buy was near the trendline support. That's what I mentioned after breadth analysis. The most important determinant of accurate market timing is use of these support and resistance trend lines. Last week was the time to start buying near support. This week it is time to stop buying near resistance. Simple and effective. That is the message from leaders index. What about mega cap index? For swing trading, the primary direction is daily. In daily, what is the direction? It is sideways. What is the preferred trading direction? Near the upper edge of the triangle, the preferred trading direction has to be bearish. But we don't have bearish signal yet. We may stop buying. Like leaders index, mega cap index, also part of Q market breadth, stopped at memory trendline support, displayed the bullish indecision cluster, then came the flow bullish momentum, and for 3 days price went up with green cyan bullish momentum candles. That was the time to buy near support. Now is not the time to buy. Now is the time to look for price to tilt down and then short. That is the message from mega cap index. When the mega cap index went up, you could look to buy some of the mega cap stocks. I will come back to that idea. But for now, note and keep in mind that mega cap index flow color changed to bullish on Wednesday, not on Tuesday. So if you saw a particular mega cap changing flow momentum color to bullish on Tuesday itself, that would be stronger than the mega cap index. And if you look to buy mega cap stocks on Tuesday where there are reasons to buy, I will look at that. I will show that later. But if you wanted to buy a mega cap on Tuesday itself, you would choose one that had bullish flow momentum on Tuesday, not after one more day when mega cap, the index itself also turned bullish. I'll come back to that idea. Just notice and remember that mega cap index flow color changed to bullish on Wednesday, not Tuesday. This is a chart of SPY, the resistance support chart in Q Global. Similar chart is there on Q Elite on TradeStation. This is on Metastock. The last candle on this chart is 10th September, Tuesday. Like mega cap index, on Tuesday SPY was not bullish. Yes, mega cap index displayed bullish indecision. SPY is doing that also. Yes, leaders index also displayed bullish indecision. SPY is also doing that. But like mega cap index, SPY did not turn bullish in terms of momentum or flow color or traffic light color. The indecision itself could be taken as a sign to stop shorting, a bullish indecision, but it was not a sign to buy. So SPY itself and probably the other market ETFs also did not flash any buy signal on Tuesday, 10th September. This session is about accurate timing of the market. The question then is, on Tuesday, was there some Q analytics that could lead us to buy? That would be even better timing than waiting for Wednesday. And I always say technical breadth is very important, because buying stocks or shorting stocks, we make money only if the stock moves in our direction. And breadth analytics is always more valuable, more effective than individual stocks analysis. And this is technical breadth from Q Finder. This is as of Tuesday, 10th September. I showed just now that leaders index, mega cap index, SPY did not turn bullish. The market did not turn bullish on Tuesday, but Q Finder showed the trade setups are starting to be more on the bullish side across the board. Helps in perfectly timing the market. When I saw this on Tuesday itself, I did a bottom-up analysis to find buy setups in strong industry and strong fundamental stocks. I decided to buy them the next day if the market turned bullish, and it indeed did, but I was already ready with some stocks. Q Finder, a breadth analysis in Q, helped me to perfectly time the market. Tuesday was the day I started to look to buy. Remember, in last market recap I mentioned that it was too late to short, but it was not time to buy yet. Now this session's question is, when was the perfect day to start buying? And Q Finder is telling, at least from this angle, that we could start that on Tuesday itself. Are there other systems that indicate that the market direction may be changing soon, like Q Finder can do? Yes, and here is one more analysis that helps us anticipate a market move. This is Wednesday, not Tuesday, and I hope I'll not mix up all the dates. This is Wednesday, not Tuesday. Tuesday the finder turned bullish. On Wednesday, 11th September, the market turned neutral. It did not turn bullish on Wednesday. It turned neutral in terms of what? In terms of sector, industry, stock breadth. It turned neutral. However, that was a very big improvement from one day ago, and even from Wednesday's morning session. This is Wednesday at the close. Wednesday morning and Tuesday at the close, this picture was much worse. And the improvement happened. The great thing is that you could anticipate the improvement. We are talking about market timing. How could you anticipate the improvement from very bearish to neutral in terms of sector, industry, stock breadth? That you could do using bucket analysis. Notice Wednesday at the close, what is the percentage of stocks in the lowest band of bucket analysis, that is below lower Bollinger Band? It is at only 7.4%. This is at the close on Wednesday. Only 7.4% of S&P 1500 stocks remain below lower Bollinger Band. On Wednesday in the morning session, what was that percentage? This is a picture I got from one of my tweets on Wednesday in the morning session. Wednesday morning, I shared that from all three of the three signals from bucket analysis, the market was extremely oversold. More than 80% of stocks were below mid Bollinger Band. More than 30% of stocks were below lower Bollinger Band, and more than 10% of stocks fell below lower Bollinger Band. All three happened together. When is this? This is everything in real time on Wednesday morning session, and I tweeted this what time? At 10:42 a.m. Eastern Standard Time, saying that bucket analysis from three out of all three possible angles is showing that a recovery is imminent. Like Finder's technical breadth, this bucket analysis from Q edge is also immediately actionable. Looking at Q Finder, you could start to look for buy candidates, and looking at bucket analysis being extremely oversold, you could anticipate a recovery. See how it improved from more than 30% stocks below lower Bollinger Band in the morning session. I go back to previous slide. On Wednesday at the close, same day, only 7.4% stocks remain below lower Bollinger Band. Huge improvement from more than 30% to just 7.4%. And though the sector industry stock breadth was still neutral, that huge improvement showed that the market was starting to go up. Let me move to Q edge, sector industry stock breadth as of today. First, look at bucket analysis. This is as of Friday's close. What is the percentage of stocks below lower Bollinger Band? Minuscule, less than 1%, 0.7%. Works like a clockwork. Once again, Q edges bucket analysis on Wednesday morning session told us that it was going to recover, and that happened. The market has now turned bullish. More than 50% of stocks, 59% to be precise, are above mid Bollinger Band, that is bullish. And if I look at the sector industry stock breadth over 5 days, this week's period, it is bullish. 2 days also bullish, Friday also bullish, 1 day. 10-day is remaining bearish, but 1 month is bullish. So longer term bullish, in the middle it turned bearish, and now it turned bullish again. And two things helped us buy right when the market was recovering after this weakness. What were the two things? Two things that we saw so far. One was Q Finder's technical breadth. Another was Q edges real time, not end of day, but real time. Without real time bucket analysis, you would not be able to time the market as accurately as I could do or you could do this time also. So real time bucket analysis and finders technical breadth. How did technical breadth change over time? I showed earlier that on Tuesday itself, Q Finder's technical breadth turned bullish, and to help you see the progression from one day to another day, I did capture some of the slides as I traded throughout the week. On Tuesday itself, I showed technical breadth turned bullish, and this is as of Wednesday's close. When the sector industry breadth turned neutral, but Q Finder technical breadth turned even more bullish. So technical breadth was one step ahead of bucket analysis. Stocks were starting to go up before bucket analysis alerted that a recovery imminent. On Wednesday, not only the technical breadth was very bullish, we also had an alert from the headwind signal that was telling that further recovery is along the way. So on Thursday, Friday, or at least Thursday, we could expect more recovery. This is Thursday's technical breadth. A large percentage of signals were bullish, majority much more than 50% were bullish across the board. And if you looked at the percentage of stocks that are giving bullish setups from price extreme high, it started to approach overbought condition, but not yet. When this percentage hits 50% or more, then we are reaching overbought territory, but we did not reach there yet on Thursday. What happened on Friday? This is as of Friday's close. Again, it is remaining bullish and it did not turn overbought yet. This is Friday's technical breadth. Now looking back, remember again the first bullish signal from Finder came on Tuesday. That was perfectly timed, isn't it? Since then, Wednesday, Thursday, Friday, technical breadth continued to remain bullish, market continued to move up, and it did not turn overbought. Looking back again, in last weekend's recap, I suggested it was late to short, that was effective and useful, aka profitable. You could buy along the way, I did. Could you? We'll look at some of the stocks, at least one that I bought during the week, and explain why did I buy that. As of Friday's close, daily technical breadth allows buying. It does not allow shorting. What about weekly technical breadth? How did it change from previous week? This is previous week's technical breadth. It was very bearish. I shared it in the last market recap. It was very bearish, but looking at market being already low from recent swing high, I suggested it was a weak market, but I suggested it was late to short. How is the weekly breadth this week? This is the weekly breadth of the current week, very bullish. And we even have headwind signal alert. What we notice, at least at the weekly level, this is previous week's picture, technical breadth, very bearish with headwind alert, bearish sign, shifted to, flipped to very bullish picture and also with headwind alert. What does it mean? When we study the headwind signal, we know this is coming in stocks at a higher price level for bearish headwind. And this week when we have headwind signal, remember these are not coming in the same stocks that gave bearish headwind. These are coming in stocks that are at a lower price level. So when you combine previous week's picture to this week's picture and focus on the headwind signal, it is not the same stocks that are flip-flopping. The stocks that were at a higher price level, they were to come down, and this week find the technical breadth is telling stocks at a lower price level are likely to go up. So market is remaining bullish from technical breadth perspective. Not doesn't allow me shorting, and if I buy, the headwind alerts are telling I would like to buy stocks at a lower price level. But I also already showed two analytics. One is the leaders index, the other was mega cap index. Both were near resistance. If it reverses from the resistance trend line, then it will be a time to short. But we are not there yet. It is at resistance, does not mean it has come down. We will have to watch out for that. If it does not come down, then these stocks at a lower price level, headwind alerts are coming from them. Those or similar stocks are buying candidates. That is what we see so far, but more to come. And other than looking at the headwind signal, if you look at the weekly technical breadth, last week was very bearish. This week is very bullish. That is showing flip-flop. Headwind signal is not showing flip-flop because those signals are coming in different kinds of stocks, but the aggregate trade setups across different categories, that is showing flip-flop from previous week bearish to this week bullish. If that flip-flop continues, we may keep that in mind. History repeats, not all the time in trading, but sometimes. If that flip-flop continues, next week may be bearish. That is another reason to stop buying. But that is an if. Flip-flop does not always come. Unless we see weakness in daily technical breadth in the coming week, objectively we are not allowed to short. We can only buy, but buy carefully. Are there other Q analysis that is showing that next week the market may come down? Yes. Why? Because like leaders index, like mega cap index, there are other market instruments that are near resistance levels, and these memory resistances are very effective, very reliable. Which parts are near resistance? Let's look at total view, the broadest view of the market, a custom index, USA total view, broadest view of the USA market. I asked the two questions. What is the trend? Sideways. Inside trend line resistance and support. Where is it in the sideways range? Near the upper edge. Near upper edge, I like to short if it comes down. It has not come down yet, but the moment it comes down, if it does that on Monday or Tuesday, maybe come down before piercing the resistance trend line, or even better, if it creates a false upside breakout. In both of those situations, I will be ready to short. This is the at a glance weekly daily view of the total view custom index. How is the total view breadth chart? Is there any warning from that? Yes, the total view breadth chart. I'm not going to read all the signals. In the interest of time, you may pause the video and read the other signals, but I will point to the 3-month new high low that is nearing, so extreme overbought condition that a reversal is likely. Does it work? Yes, it works like a clockwork. It worked here, and I mentioned that in the market recap. It worked here, I mentioned that in that market recap. It worked here at the top, worked here at the bottom. Works like a clockwork. It is not there yet. It is nearing the level from where a reversal is likely. This is one oscillator that is immediately actionable. The other oscillator that is immediately actionable, I already showed, that was bucket analysis. Now the total view itself is nearing extreme overbought condition, but not there yet. Are there other pockets that are already at the extreme overbought condition? Yes. This is the composites breadth chart, Nasdaq and NYSE. NYSE has already hit the extreme overbought level. Again, works like a clockwork. I'm expecting a pullback of at least some of the NYSE stocks. What about Nasdaq? Nasdaq is far from overbought, extreme overbought level, which is here. And that is what was there earlier also. Earlier, Nasdaq was here when NYSE already hit overbought condition. Then NYSE pulled back, Nasdaq also pulled back. I am expecting the same thing to repeat. That is, NYSE is already extremely overbought. When it pulls back, if it pulls back, I am expecting Nasdaq to be pulled down along with that, just like it happened earlier. Meaning that Nasdaq is weaker than NYSE, and NYSE is extremely overbought. Are there other pockets from breadth charts? See the power of breadth charts. I'm able to decide well ahead of others, probably at least others who are not using breadth insights, that it is too late to buy now. Just like last week I suggested it was a bit late to short. Other pockets overbought? Yes. This is now drilling down into the major indexes breadth. S&P 500 already extremely overbought, works like a clockwork, expecting a pullback. S&P 1500, a broad index with small, mid and large cap stocks, also extremely overbought, works like a clockwork. I'm expecting a pullback. Nasdaq 100, Russell 2000, Dow Jones Industrials are very close to being extremely overbought, so much that a pullback will be likely. If it goes up for 1 day or maybe 2 days, it will hit extreme overbought level for all the major indexes. Two of them are already extremely overbought. That is a reason to be very cautious about buying. Remember earlier when we reached these overbought levels, and that time it hit it across all the major indexes, I shorted. I publicly stated that, I always state that it works like a clockwork, thanks to Mr. Dr. Jeffrey Scott, from whom I learned about these studies, and I implemented it across multiple dimensions, total view, composites, as well as major indexes. Earlier, when it hit extreme overbought level across the board, I said I stopped buying. I was looking to short. I am inclined to do the same this week also, because enough of them, at least three, S&P 1500, 500, and we saw NYSE also, has already hit extreme overbought level. Overall summary from market breadth studies: the market was down last week and I showed it was not time to short. This week the market went up and Q is saying it is not time to buy. I'll go with Q Analytics as it has made me consistent profit. It is risky to buy now. I will wait to short. It is not time to short yet. That is the market level view. It does not allow me to short yet. At an individual stock level, we saw there is a bullish headwind in the weekly technical breadth in Q Finder. Therefore, at an individual stock level, there may be buy candidates. What kind of stocks? At a lower price level, because weekly bullish headwind comes in stocks at a lower price level. I did not buy any stock at the close of Friday, but I like to share at least one stock that you may look into for buying. I may look into. I have already looked into. I'll see how it does next week. It may be worth watching that stock and similar stocks next week. But before I go into the buying candidate for this week, I would like to review some of the stocks I mentioned in previous week's market recap. CVS was one. I showed that stock had a decent dividend yield. I also mentioned I bought it and I exited it with a small loss. And I also mentioned I was going to watch out for the stock to hold support. What support? Again, the very consistently reliable memory trendline support in weekly, whether that held or not. That's what I mentioned in the last market recap, and that held. In weekly, it is now inside a triangle. Daily has a trendline resistance. Daily watermark support has held. Even better, it created a false downside breakout. I am keeping an eye on it, continuing to watch it to see if it can break out of the trendline resistance. As I mentioned earlier, covered call is an attractive strategy for me in such cases. In what kind of cases? Where the stock is stabilizing over a long period of time, then time decay is in my favor if I trade with covered call. And why covered call against short put? Psychologically, it is easier to hold covered call sometimes, and also if it stays steady in this range for a long time, by using covered call we may get the dividend. It has a decent dividend yield, not very high but decent dividend yield. So stabilizing at a lower price level, covered call is a suitable strategy for that, at least for me. So I am continuing to watch CVS that I mentioned last week. That was a bullish stock I mentioned. I mentioned one stock last week, CPNG, that I wanted to short. And let me explain how I traded that. Yes, I did trade it. This was Friday. That time it gave a bearish setup. But at the market level, I showed it was a bit risky to short. As of Friday, I did not short it. I tried to short it on Monday using fine-tuned chart, and I made a nice profit from it. And let me show how. Let me try to align the charts. Let me open the precision entry chart to show how I traded it on Monday. On Friday, I analyzed it to be a short candidate, being fully aware that it was a bit late to short. So I was waiting for a precise entry, and I aligned the daily and weekly charts. This is Monday's open. This is Monday's open, which was well above Friday's close. That is not bad for me. When I am looking to short, if a stock goes up and then starts to calm down, it allows me to have a better short fill price. So I am never disheartened to see a stock going up. That is a short candidate for me on the precision entry chart or fine tune chart. So it went up above the early range high. At the very top, it displayed a bearish indecision, and then it displayed bear release. The moment it went below the candle that displayed bear release, I was allowed to short with stop just above day's high, and that is what I did. Because here the stop level is using 5-minute chart. I use 5-minute chart always in the morning session, 10 minutes in the afternoon session if I am trading using fine-tune chart. So here 5-minute chart in the morning session, because the stop is only few candles on 5-minute interval, I can short many more shares than I can using daily interval at a glance template. So I shorted it, and when it hit the opening price, much more than risk distance was covered, or maybe about the same, slightly more than risk distance was covered, and I closed at least partial position in the stock. It closed here, and when it is closing near the market close, I then switch back to the daily interval and see how the daily is closing. And the daily was not looking bearish, it was looking indecisive. It was an inside candle, and in the market recap I already explained, I knew that it was a bit late to short. So I did not hold partial position, I closed the entire trade with a profit. I could make a profit because I used the precision entry template. See how I used the insight that it was bit late to short and then shorted only using precision entry template 5-minute interval so that my risk was low and I made a profit, and I also closed the trade seeing that the candle did not look bearish anymore. Then it recovered. Just like I am watching CVS for a buy setup again, I am watching CPNG for a short setup. If it comes down from here, that will create a false upside breakout. We already have a bearish indecision at the top. We had a bearish headwind at this level. It is not uncommon for a stock that came down after bearish headwind to retest that headwind resistance and then come down again. So if it creates a false upside breakout, I will like to short it with a narrow stop loss. Stop will be just above Friday's candle's high, provided it comes down on Monday itself and it does not breach Friday's high before it comes down. If it creates a false upside breakout in daily, it will also create a false upside breakout in weekly. That gives even more strength to the shorting idea. And I will short only provided its industry is also weak at that time, that I can see from Q edge in real time. That was CPNG, that was CVS, and let me show a stock that I bought along the way. An easy stock, Microsoft. Remember, the leaders index recovered first. Mega caps were also doing well. And when I showed mega cap index, I also showed that mega cap index turned bullish with flow traffic light momentum on Wednesday. But I traded Microsoft, where the flow momentum, in fact even a flow setup, came not on Wednesday, on Tuesday itself. What else came on Tuesday? The Q finder technical breadth turned bullish on Tuesday. So when I did the analysis on Tuesday, I found stocks like Microsoft. But did I buy it on Tuesday? No. One reason was there was a small upper tail. Other reason was the overall market, SPY for example, was not bullish yet. It was stabilizing at a swing low, but it was not bullish yet at market level. Stronger stocks move up before the market. Microsoft did that. So I was ready with Microsoft at the close of Tuesday. One more reason why I did not did not buy it on Tuesday was the trend line resistance. Very effective, very useful. On Tuesday, though it displayed a bullish flow, gave a flow setup on Tuesday, it was just below the trend line resistance. So I did not buy it on Tuesday, I bought it on Wednesday. And see again, just like in case of shorting CPNG, I was not unhappy that it opened higher on Monday. I got a better fill price for shorting. When Microsoft initially came down on Wednesday, I was not unhappy. I was happy because I'm not going to spend time on the precision entry chart, but you may look at it. Using the precision entry chart, I could get a better fill price in Microsoft. On Wednesday, I bought it using precision entry template. It went up significantly, covered much more than my risk distance, and in this case I closed the entire position. Why did I close the entire position? Because I saw mega cap index is near trend line resistance. So was leader index. So I had a nice profit. That is always important. I booked the profit. Were there other reasons why I booked profit? Yes. In fact, many of the market ETFs are near resistance, and I should look at that now. That should not be missed in this session. These memory lines work miraculously well. This is SPY. Two questions again. What is the trend? What is the preferred trading direction? Trend inside a triangle, sideways move. Where is it in the sideways move? At the upper edge. What is the preferred trading direction? Actually down, provided it reverses at the trend line resistance. We had bearish headwind at the same level, multiple of them. It is not uncommon for price to come to the headwind level and reverse again. So if it reverses, I may not be willing to short SPY, because by the time it closes below trend line resistance with a down candle, it will be too close to the trend line support. But if the reversal happens in SPY from trend line resistance, I'm sure I'll find weak fundamental stocks in weak industries to short. So this resistance is also one reason I think it is too late to buy now. What about QQQ? In fact, you will see this resistance or similar resistance is there in all the market ETFs. QQQ, what is the trend? Sideways. QQQ is weaker than SPY, could not recover so much like SPY did, just like Nasdaq Composite was weaker than NYSE Composite. It is moving sideways inside a triangle at the upper edge of the triangle. Sideways trend and preferred trading direction is actually short, provided it can tilt down. Weekly is also near a trend line resistance. I will rather short than buy, provided it can tilt down. Dia, here it is near watermark resistance, at which level bearish headwind came earlier, created a double top, came down. Now if it tilts down, it will create a false upside breakout, it will create a triple top. I like to short, I will not like to buy now. One reason I will not like to buy also because the swing low is pretty far away. Preferred direction short, but not yet, waiting for a reversal down. And IWM clearly weaker than Dia, moving inside a triangle like SPY, like QQQ. Sideways move. Where is it in the sideways move? At the upper edge of the sideways range. I would like to short, provided it can come down. And I looked at all of that when I decided to book full profit in Microsoft. Having said that, the tilt down has not come yet, and the bullish headwind is there in the technical breadth Q finder. So I'm going to share a stock that I am keeping an eye on. I have not bought it because the market is near resistance from many pockets, but I identified a few stocks for possible buying. CVS is one that I am continuing with. The other one is Upwork, UPWK, that is the ticker, and it is in an industry which has similar other stocks that are showing some strength, maybe stabilizing at a lower price level, maybe starting to go up. And I'm going to look at it from all the angles. Let's look at it, create the vital scorecard, and at the same time look at the stock Upwork. UPWK. It has many things in its favor. It has the lucrative pattern, often lucrative pattern provided it comes in a strong fundamental stock, of being at jump thrust low, price extreme low, then came big move up 3. as is not uncommon, after that price came down little bit, did not go down anywhere close to the previous watermark support, created a higher low, created a bullish indecision cluster that often pre tells a move upward. And on Friday it had a fantastic move with a big move up 3, with a huge gap up, with a flow buy setup, also with a breakout buy setup. So it had many buy setups, not just signals, on Friday. And on weekly it has a very nice double bottom at watermark support, moved sideways for number of weeks and has a very bullish shape candle this week after many weeks at a low price level. So this may be a lucrative buy setup, but I always like to look at it holistically. So let's look at its fundamental score. Undervalued stock, robust earnings quality, short squeeze potential, high earnings growth. Yes, it is reducing earnings growth, but that is why the stock is at a lower price point, at price extreme low and showing big move up 3, but it still has high earnings growth, positive revenue growth, profitable stock. Huge 87% of peer stocks, human resources and employment services went up on Friday. Let's look at its seasonality. I always look at it, though it is not a required condition for me to buy or short. While it is retrieving data for seasonality, let's look at the industry scorecard from QEdge. It is not one of the strongest, but it is one of the most accelerating. And remember, this stock was at jump thrust low, price extreme low. Now only it broke out. I don't expect that stock's industry to be strong. I am very happy to see that it is one of the most accelerating industries. So industry allows me to buy. Let's go back to seasonality. Nothing in seasonality in September or even October, November, December, neither bullish nor bearish. So nothing is there for us to buy or not to buy from seasonality. From fundamental scorecard, from industry score, and certainly from technicals, it is a buy candidate. Now I would also like to, I already showed that on charts, but let's also look up the find the technical signals for this individual stock. You will see I see number of signals from Q Finder before even opening the chart. Upwork, I looked it up from Q Finder, is at extreme low. It has a flow buy setup, it has a breakout buy setup. It also has a fan out signal and a bullish indecision signal. So these are actually patterns, indecision pattern and fan out pattern. These are attractive patterns to identify buy candidates, and we have two possible buy setups. And one reason I came here is to show the momentum signals, HGSI like signals. If you are familiar with HGSI trading, high growth stock investing, let's look up the momentum signals, HGSI like signals for this stock. A very high, and this is why I wanted to come to Q Finder to show that very high 6 count of bullish momentum in HSI like signals. Bullish bongo, Mobo breakout from a squeeze with a kahuna, with a Bible gap up, with a PSAR reversal and also a big move up that I already showed. 1, 2, 3, 4, 5, 6. 6 momentum signals. Huge up move up 9.99% on Friday. But it is not too late to buy when we look at the weekly daily technical chart. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. With that, let me end today's session. Thanks a lot for attending. I look forward to seeing you in my next session, Market Recap. Have a great weekend, and as I always say, as these live sessions, I hope shows there is no reason not to do that. Trade profitably. Thank you.